This studio in Dubai is priced at 180,000 US dollars, and this villa costs 90 million US dollars. But just because you can doesn't mean you should buy either of them. So in this video I'll show you where you should invest if you have this much money or this much money, and everything in between. And I'm going to pull back the curtain on how the $20 million plus investments work. This has never been shared on YouTube before, and it shows you exactly how high net worth individuals and funds structure their deals. Starting with $200,000 budget. $200,000 or 735,000 dirhams is generally the minimum budget for a worthwhile investment in Dubai. With this money, your goal should be achieving a stable rental income. The average rental yield in Dubai is around 5%. A good property can yield 7 to 8%, and great units generate around 10. But I want to warn you, with $200,000, significant value growth is unlikely. I mean, your property might grow, but generally it will match the market, not outperform it. There are a few exceptions though, and I'll share some a bit later. In terms of sizes, $200,000 can get you a studio in some areas, and the studio is your maximum. And I know there are one-bedroom listings on Property Finder for 700,000 dirhams, but normally you don't want to invest in these properties. So let's focus on the areas and specific projects where for $200,000 you can actually buy a decent studio as an investment. The first area is Al Jadaf. It's 12 minutes from downtown, it has its own metro, and recently became freehold. Developers like Bengadi and Ellington are starting to build there, and Dubai Electricity and Water Authority is also building a new 3,000-person headquarters. Prices have risen by 45% since 2022. Higher than the market, and the rent-to-price ratio for a studio is around 8 to 8.5%. A good studio here starts from 220,000 US dollars, at around $480 per square foot. The second area is Arjan. It's 20 minutes from Dubai Marina and downtown and near Science Park, an office area for healthcare and biotech companies. It's low-rise, which means easier traffic flow and faster handovers. Prices have grown by 50% since 2022, but the area is still quite affordable. Studios have the best yield at an average 8.7% rent-to-price ratio. In a good project like Bengadi Hill Views, studios start at 220,000 US dollars, at $540 per square foot. We estimate a rent-to-price ratio of around 8%. The third area is Motor City. Its advantage is that it's quite developed. Its disadvantage is a noisy Dubai Autodrome. Some reputable developers are building quite pricey projects here, but recently one good but affordable project was announced. It will be $218,000 for a studio, at $369 per square foot. We estimate the future rent-to-price ratio to be around 8.5%. The fourth area is Dubai South. Not the whole Dubai South, we mean a specific spot where there will be a really low-priced but decent quality building. One of the reasons we recommend it is that the new Al Maktoum airport is expected to create 500,000 new jobs. These are target renters. One-bedroom apartments are expected to be from 190,000 US dollars to 220,000, from 295 to $335 per square foot. And the fifth area is Dubai Land Residence Complex. Top developers like Imtiaz are entering the area, and it's finally starting to develop. It's next to Academic City and will get metro access with the Blue Line. Co-edition by Imtiaz offers fully furnished studios, starting at 190,000 US dollars. We estimate the rent-to-price ratio will be around 7 to 8%. And the final area is GVT. It's well located, 15 minutes from Marina, with lots of villas, and some major developers entering the area. Here we recommend Sol Levante. It costs $200,000 for a studio, at around $480 per square foot, and we estimate the rent-to-price ratio to be around 8.5%. So if you're considering investing in any of these projects, get in touch with us. For those of you who don't know, we're a real estate advisory and brokerage firm that works with affluent and high net worth individuals, and we support our clients through the entire process of investing in Dubai. First, we create a personalized shortlist of options based on your goals and budget, whether it's 200,000 or 20 million US dollars. Second, we help you prioritize those options based on data and real market insights. Third, we help you secure the best possible unit. And finally, we rent it out or sell it for you. So if you want to work with my team, scan the QR code, click the link below, or send us a WhatsApp message to schedule your free consultation. Next, we'll look at the best properties you can get for 550,000 US dollars in Dubai. And it's quite a specific number, 550,000 US dollars or 2 million dirhams, because it will make you eligible to apply for a golden visa. It gives you a 10-year residency with no minimum stay required. Golden visa covers whole family, including your parents. You can sponsor domestic staff, like a nanny or driver, to stay with your family, and you get full access to a Dubai bank account, even if you're not always in the UAE. Golden visa is one benefit, but there is one more thing you often won't get with a lower budget – rapid capital appreciation. This tier gives you a lot more opportunities. That's because you can invest in units in high-potential early-stage areas and complexes by top-tier developers, and these have a much higher chance of growing significantly over time. For $550,000 you're typically looking at apartments ranging from 1 to 3 bedrooms. It usually isn't enough for a good quality villa or townhouse. If you increase the budget to around $650,000 to $700,000, you can find townhouses, but they often have trade-offs like less desirable layouts, lower quality, and less reliable developers. So there are a few different areas you should consider with this budget. First, newer prime areas like Dubai Islands, which is your go-to place if you want the fastest value growth. With $550,000 you can get a good one-bedroom apartment. With a higher budget, around $650,000 to $700,000, you could get a premium one-bedroom on a first beach row with a private beach. Here's one example: Wynwood on Dubai Islands. 4 reasons why one should consider it. The first reason is its location. It's in a beachfront area. It's not in the first beach row, but it's only a 20-minute walk away. Second, it's developed by Imtiaz. They deliver all their units fully designed and fully furnished at a really high quality. Third, the prices here are competitive. One-bedroom apartments are from $500,000, around $650 per square foot, and this is the lowest price you could get for a property this good in a beachfront area of Dubai. Fourth, there is potential for strong rental returns. Based on how short-term rentals perform in existing beachfront areas, you can conservatively expect an 8–8.5% net rental yield, and these numbers could go even higher, depending on how quickly Dubai Islands develops. Number 2, you could invest in areas near iconic developed locations. For example, you could get a studio or one-bedroom in Business Bay. The capital appreciation won't be that huge compared to Dubai Islands, but Business Bay works fine for both Airbnb and long-term rentals. Or for this budget in Dubai Marina, you can typically get a studio or one bed, and if you want a bigger unit, you might look at Jumeirah Lake Towers. GLD is great for both short-term rentals thanks to its proximity to Marina and GBR, and long-term rentals because it's a free zone with offices and easy metro access. Third, you could invest in residential areas like Dubai Hills, Gulf Woods, or Shoba Heartland 2. Here, with this budget, you can find apartments for small to medium families. Out of these 3, Gulf Woods right now is probably the most interesting in terms of growth potential. It's a master community, currently under development, but the plan is to have 35,000 trees and only 7,000 residential units. Currently, you can get a one-bedroom for $400,000 at $470 per square foot. To give you an idea of growth potential, we'll take the average apartment in Al Barari. It's a super green area nearby, which is known for huge luxurious villas. But there are also apartment buildings that aren't that luxurious, and there are good reference points. So the price per square foot is around $610 for ready properties, which is around 30% higher than in Gulf Woods. And for rental potential, one-bedroom apartments in Al Barari rent for around $35,500 per year. We assume that a one-bed in Gulf Woods will easily achieve the same rates when the construction is finished, and eventually will be priced higher. So, even with this conservative estimate, the rent-to-price ratio will be around 7.7 to 8.7%, which is almost 2 times higher than the Dubai market average. Next, let's look at investments in the $2 million tier. If you're making a $2 million investment, you can achieve one of 2 goals. The first is capital growth, because the property types available in this range are genuinely more scarce and appreciate very quickly. And the second is protection from downturns. At a $2 million budget, you're not limited to just apartments. You can already access villas, townhouses, or larger multi-bedroom units in several areas of Dubai. Properties at this price typically generate more stable income, even if there is an economic decline. I'll show you what I mean. These are Dubai's average rental rates for apartments. The highlighted section here is during COVID. You can see while apartments dropped by 27%, villas declined by just 13%, and even within apartments, bigger units performed better than smaller ones. In Business Bay, one-bedroom rental rates dropped by 25%, but 3 beds went down by just 16%. In downtown, 1 beds dropped by 20%, compared to 8% for 3 beds. And in Dubai Marina, 1 beds dropped by 31%, while 3 beds decreased by only 4%. And this is all because bigger units are usually rented by families. And families are the most stable tenants, because they don't like to move once they've chosen the right place. So at a $2 million budget, you can consider a few different types of property. First, a serious villas in early-stage projects by reputable developers like Emmar. These might be a bit farther from the city center, but still offer a great value. Second are townhouses in more developed areas, such as Jumeirah Golf Estates. Or third, you could get a larger, more premium apartment. This still has excellent potential for both rental income and long-term appreciation. For an early-stage villas by a top developer, consider areas like Emmar Grand Polo Club. Emmar Grand Polo Club is a newly launched master community by Emmar, and I don't think I have to tell you much about Emmar. It's the largest developer in the UAE, and many of their projects have brought huge returns to investors. And this new community is centered around a world-class polo club. The community will be low density. With a $2 million budget, you could buy a 3 to 4 bedroom entry-level standalone villa, depending on the phase and unit location. And the most interesting feature of this community is that it's at its earliest stages. There will be many more villa launches in the future, and because Emmar is the master developer, they will have full control of the prices. They tend to raise the value with every launch, so if you buy early, the value of your unit will be dragged up too. But if you want a villa in a more developed community, take a look at Jumeirah Golf Estates. This is one of the most sought-after communities in Dubai. Great for living because of the community itself and proximity to residential infrastructure. On the one hand, it's developed, so there is less risk and less returns. New areas have a much higher chance of beating the market. On the other, the current pricing shows that there is growth potential. Let me show you. The Jumeirah Golf Estates average is $600 per square foot, and this includes a mix of villas, townhouses, and older properties. Jasmine Lane, a new recently built townhouse subcommunity in Jumeirah Golf Estates, is $732 per square foot, and Dark Global Villas, the newest of planned launch, are $564 per square foot. Dark Global Villas are priced slightly lower than the average in Jumeirah Golf Estates, and 30% less than Jasmine Lane. And rental rates in Jasmine Lane start from $82,000 annually, and it's for a 3-bed townhouse. So for a 4-bed Dark Global Villa, you could expect around $110,000 in rent per year, giving a 6.7% rental yield. And finally, for a larger property, you could get a big apartment on the Dubai Islands. And the project I'm talking about is an incredibly rare opportunity, because the location is truly unique. Let me explain why. First, it's on the first beach row with a private beach. From a value appreciation perspective, it's the best feature. Such spots are scarce. Second, it's between Island A and Island B, which means it will have better views than any other property on the island. It will have a full frontal sea view with a golf course panorama on the right. Third, the neighboring plot is secured by Rixos, a premium hotel brand. And other plots nearby are also planned for top hotels, so the spot is perfect for Airbnb. And finally, there will be just 100 units in 2 buildings. This doesn't just mean privacy and low density, it will give investors very strong leverage. Whether you decide to rent it out or resell, you won't have much competition. For $2.2 million, you can secure a 3-bedroom apartment here. For those with a smaller budget, the starting price for 2-bedroom apartments is expected to be $1.3 million. This project is not publicly announced yet, so if you want to secure the unit before everyone else, drop us a message and we'll give you all the details. Now, I'll show you the best way to invest $5 million in Dubai. If you're investing $5 million into properties here, you might choose one of 3 strategies: diversification, enhanced capital growth, or a stable long-term investment. Let me walk you through all of them. First, diversification. Your portfolio should be a mix of 1. Different customer groups, properties that appeal to tourists, families, or single residents. This could mean that some of your properties focus on short-term rentals and others on long-term. 2. Different areas, ranging from early to mature stages of development. And 3. Different types of properties, from apartments to villas. You need to do it this way because that's how you protect yourself from different market cycles and achieve better liquidity. The key is to have as low a correlation between asset performance as possible. So diversifying your real estate portfolio is about more than just buying multiple properties. Investing in 3 studio apartments in a single tourist district would make your capital very vulnerable. Here's an example of how a $5 million portfolio could look like. 1. A short-term rental in an early-stage area, like Shuak on Dubai Islands. A 2-bedroom beachfront apartment there is priced at $1.3 million, and proximity to beaches is very appealing to tourists. 2. A long-term rental in an early-stage area. We'd consider a 4-bedroom villa in the Mars New Grand Polo Club community. It costs about $1.6 million and offers family-oriented living from one of Dubai's most reliable developers. Or for the same category, we could choose a 3-bedroom apartment in Gulf Woods, priced at $1.3 million. 3. Short-term rentals in developed areas, like Grove Home in Dubai Marina for $440,000 for a studio. It's Airbnb focused, right near the Metro and Marina Mall, fully furnished and with over 50 different amenities. And for the same category, we can add 1-bedroom apartment in downtown. There is an option that would cost around $600,000. Downtown is the main city's destination and will likely stay this way for many years to come. And finally, a long-term rental in a mature area. You could get a 4-bedroom villa priced at $1.8 million in Dark Global Villas. There is high demand for villas and it's within a developed community, and this is just one of many different approaches. But I think you got the idea. The second strategy you could use with $5 million is investing in properties that will give you enhanced capital growth. With this budget, you can invest in unique, high-demand properties that are more likely to appreciate quickly. For example, a townhouse on the first beach row in a location like Dubai Islands, where such properties are extremely limited and highly sought after. Here we'd recommend Shuwaka Residences, which I mentioned before. It's a boutique beachfront development located on Island B of Dubai Islands. There is a very small number of townhouses and they're right on the first beach row. Each townhouse in Shuwaka Residences is a 3-bedroom plus made on the first beach row with a built-up area of approximately 4,800 square foot, and they come with underground private parking, private lobby, private elevator, and many other features. There is a very low number of houses in Dubai offering this combination of privacy, beachfront access, low unit count, and early-stage pricing. These townhouses are priced at $4.9 million. Finally, the third strategy for a $5 million investment is purchasing stable, long-term projects. To secure a property that will stay desirable and scarce over 10-15 years, you need to buy an iconic, established areas like downtown, near the Burj Khalifa. You could invest in a project like Fairmont Residences. There are not many plots in downtown, and Burj Khalifa will not go anywhere. And soon, it will be impossible to invest in a new property there. There are 2 penthouses in this project, each around 4,000 square feet. They are fully serviced, with amazing views and walking distance access to the Burj Khalifa. They are both priced at $5.4 million at around $1,300 per square foot. Alright, now we've made it to the most exciting tier. What to do if you're investing in a budget of $20 million or more? There are 3 strategies. The first is to purchase an ultra-exclusive property, the kind that can't be compared to anything else on the market, like a penthouse on the first beach row in Dubai Islands, with an obstructed sea views. These properties are so scarce that once they're completed, they almost never come back onto the market. Most buyers are ultra-high net worth individuals purchasing for personal use, and those who buy them as investments usually hold onto them long-term, making them even more rare on the secondary market. The second strategy is bulk deals. There are 3 major benefits to buying in bulk. The first is that when you buy an entire floor, multiple floors, or even an entire building, you can unlock substantial discounts. So even if the property doesn't increase in value, you've gained a profit just by buying at a lower price than everyone else. Say a developer is selling units at $500 per square foot. You're buying 2 full floors, and they're giving a discount of 20%. By the way, this number is real, from previous experience. So by buying in bulk, you negotiate the price per square foot down to $400. Over the course of construction, let's assume the market moves up 20%. So then the average price per square foot for a unit becomes $600. That's a gain of $200 per square foot, or a 50% return just based on your initial investment. And if you want to attract buyers quickly, you can even price your unit slightly below the market value, say at $550. So you still earn substantial profits while creating a better deal for the buyers. The second benefit to buying in bulk is market control. If you own enough of the development, you can control how much of the supply hits the market at handover. You can avoid flooding the market, meaning there is no risk of oversupply. You become a market maker. The market price is the price you set, because there is no competition. But this works with unique properties only. The third benefit is that if you buy a whole building, you can rent all the units short-term and basically convert the building into a hotel. And if you're doing this as an individual, Dubai doesn't tax rental income and doesn't charge VAT on residential rent. The final strategy you can use to make the most out of your $20 million is structured investment deals. There are 3 main ways to do this. The first is construction financing. You can fund a project directly, similar to a loan. If you're dealing with a reputable developer, the risk is immaterial, but the returns here is much higher than a traditional investment like bonds or savings accounts. The second is investment contracts. The developer will set aside units for you at a discount, but then when the market rises, the developer will sell these units for you. So you get the double benefit of the initial discount and developer sales force. The last method is joint ventures. This is where you partner directly with the developer. You might contribute financially to the land or construction and share the returns when the project is completed. It's quite predictable and can make you more money than any other traditional investment. This was a teaser, and if you want more information on how to use these strategies, reach out to us for a consultation. And if you're still exploring and gathering information about the Dubai real estate market, check out this video.